Those Meta shares are plummeting on lower than expected first quarter guidance, as well as some evidence of user struggles for Facebook, the core app.
Facebook, now Meta, lost over $220 billion in market value in a single day following its earnings report. Quick tip: if you're eager to buy the dip, make sure to watch till the end. There are a few important things to know before buying or selling this stock. Anyway, as the Gogo from Cold Fusion said many times, Facebook is the company that everyone loves to hate. Last week's share price drop was cheered by many over the internet. Was such a value crash warranted, or did traders overreact? Let's find out. So what's the big deal? Last year in September, Meta's market value reached all-time high of over $1 trillion. And on October 28, company held their annual conference, Connect, where Mark showcased their efforts in Metaverse space and at the end of the presentation announced that Facebook is renamed to Meta. This new name will better suit their future focus on Metaverse, he said. Metaverse is the next big step in our technological revolution, that's for sure, but it's still not clear who and how will be the leader in this space. And that is just one of the things that Wall Street didn't like when Meta reported earnings. So what happened? In the earnings report, company stated that they are experiencing multiple headwinds that are putting pressure on their business, from the latest Apple iOS privacy update, EU regulatory change, pressure on privacy issues, and growing inflation, just to name a few. The biggest surprise to Wall Street was first that Facebook daily active users declined for the first time in history of Facebook. From 1.930 billion daily active users in third quarter of 2021 to 1.929 billion daily active users, a decline of mere 1 million users on the base number of 1.9 billion, and second was bigger than expected operating loss of Reality Labs segment. Reality Labs segment includes augmented and virtual reality related hardware, software and content. For the fourth quarter of 2021, operating loss was 3.3 billion on 877 million in revenue. Despite Facebook's decline in daily active users and bigger than expected loss in virtual reality segment, Meta still managed to grow overall revenue and total active users across all platforms. Yes, total income and operating margin were lower year over year due to lower ad impression on Reels. Once advertisement tools are adjusted for short-form video of Reels, those profits and margins will correct. After the earnings call, share plummeted by 26%, wiping out more than 220 billion of its market value. This was the single biggest drop in history of the stock market. If you want to know where all this stock market frenzy started, make sure to check out my video about the stock market history. It looks like that growing regulatory concerns in Europe in combination with Facebook daily active user decline and higher than expected losses in Reality Labs segment convinced Wall Street that this company is much less valuable than they previously thought. So is this a buying opportunity? This huge drop in market capital created a great buying opportunity for long-term investors. One of the most important metrics for valuing business is PE ratio. PE ratio, or price to earnings, is the ratio for valuing a company that measures its current share price relative to its earnings per share. Current PE for Meta is 17.18 compared to S&P's 24.56 and Google's 26.33. Although PE ratio should not be used as a standalone metric when determining whether to invest or not, it's certainly helpful to see that price in relation to value decreased. If you were looking to invest in Meta or in the future of Metaverse, this might be a buying opportunity. But before you start loading with Meta shares, it may be best to wait for 3-day rule to give us a peek into the minds of investors and traders. 3-day rule dictates that following a substantial drop in stock's share price, investors should wait 3 days to buy. This is because sudden drops in stock prices can trigger margin calls in accounts that bought the stock using leverage. These margin calls can trigger additional sales the next day. Additionally, institutional investors that wish to exit the position will spread their sale over a span of 2 to 3 days. Lastly, SEC requires that settlement of share transfers must be done within 3 days. So those who sold the first day on the initial drop will have to report it with SEC by the end of third day. So what's my take on this? Considering that Meta is a well-established business with family of apps that complement each other, and their experience navigating attention shift from one media format to another, I'm sure they will survive and adopt. Also worth noting is that Metaverse hold potential for multiple revenue streams in the future. This is shaping to be a $1 trillion industry within the next 10 years. If they manage to capture just a fraction of this potential, Meta will be a solid play for the next decade. However, I would wait 3 to 5 days to see how the market reacts before purchasing any shares.